To understand the head and shoulder pattern in technical analysis, we say that it signifies a potential reversal from a bullish to a bearish trend. So just to illustrate, what we are saying is that we are looking at the head and shoulder patterns. Okay, we are saying that this head and shoulder pattern, they convert a bullish trend to a bearish trend. So in that case scenario, remember we are coming from an uptrend. Okay, good, which forms some higher lows and higher highs, higher lows and a higher high. This is a higher high, this one is a higher low. To form a head and a shoulder pattern, we require to form the first shoulder. Okay, so consequently, on this higher high, the price will start to retrace back on this uptrend. So this one is an uptrend. Okay, the price will start to retrace back, breaking this higher low. It will tend to come up to that point. It will start gaining momentum, going to forming. Now this one is the first shoulder. This one is the first shoulder, which is a left shoulder. Reaching here on this higher low, we can see that the price has been rejected here. It has gained some bullish momentum. It has surpassed this higher high of the first shoulder, and it is going to form another peak here. This peak, we call it the head. Okay, for some reason the price fails to form higher highs and higher lows, and it starts to retrace. When it retraces back, it will come to this line. This one is a temporary support. Okay, it will fail to break this line, and it will start gaining some bullish momentum. All right, but on reaching here, it will find a temporary resistance area here formed by these higher highs. All right, it will start to retrace back to the original support area. Okay, if we have enough bearish pressure, bearish momentum, the price is bound to break out of this area and continue to go lower. So in this case, this line, we refer it as a neck line. All right, we refer this line as a neckline. This one is the second shoulder. This one is the second shoulder. Okay, so remember, this one was an uptrend. Here we are going now to form a downtrend. Why? We said this one is a reversal pattern. The head and shoulder pattern is a reversal pattern, meaning it is converting an uptrend to a downtrend. So we find that this one is a breakout. Okay, this one is a breakout. More often than not, you will find that this trade here will tend to hit a pullback, test this previous support area. It becomes now a resistance, and now the price will go into a down trend. Okay, so this one is just a temporary pullback. Okay, so this one becomes a pull back after the back test. It retests this area, now becomes the resistance, and the price will go lower and lower and lower. Okay? As I've said, the head and the shoulder pattern is also a trend reversal formation, just like what we had learned on the double top and the double bottoms. Okay, so it forms the first peak, which is the first shoulder, followed by the second peak, which is a higher peak, which is the head. Okay, and then another peak, which is the second shoulder. All right, good. So in this formation, a neckline is formed connecting the lowest point of these two shoulders. All right, a neckline is formed connecting the lowest points of these two shoulders. So point 1, point 2, point 3, point 4, they form a neck line. You can see that my neckline is sloping. Okay, so this neckline can either slope up or slope down. In my trading experience, when the slope is down, it produces a more reliable signal. Why? It will show that the momentum is bearish, and therefore if we have a breakout here, a bearish breakout here, after this pullback we are expecting some sales. All right, good. So the head is the second peak and it is the highest in this pattern. Okay, so these two shoulders, the first shoulder and the second shoulder, they also form, but they do not exceed the height of this head. All right, that is how you know that you have a head and a shoulder formation. Okay, so with this formation we look at an entry below this neckline to the downside. Okay, so in our case here we would have placed some sell stop orders around this area, so that when price comes here it will trigger us into a selling position. We come and retest this temporary support, now a resistance, and we start on a downtrend selling with these markets. Okay, good. So this is basically everything about the head and the shoulder pattern. Okay, good. As I said, that these two peaks, the two shoulders, are similar in height, but the third peak, it appears in the middle and it is the highest of these two peaks. That informs you that you are having a head and a shoulder pattern. Okay, so if you have understood this well, we are going to look at the reverse of this, the reverse head and shoulder pattern, which happens when you are moving from a downtrend to an uptrend. Okay, so I will wrap this and look at the reverse head and shoulder pattern. The reverse head and shoulder pattern. When we are looking at the reverse head and shoulder pattern, as the name suggests, the inverse is true. It is basically meaning that a head and shoulder formation, but except that it is in reverse. All right, remember, in the head and shoulder pattern we were looking at a change from an uptrend to a downtrend. In the reverse we'll be looking the price change from a downtrend to, yes, an uptrend. Okay, so let us say that the price was in a downtrend, moving like this in a downtrend. Okay, forming some lower highs and lower lows, forming some lower highs and lower lows, forming some lower highs and lower lows. All right, good. So formation of reverse head and shoulder pattern, we say that there is formation of shoulder. So this formation, we expect it to form the first shoulder. Okay, the price for some reason will retrace to this level. All right, will retrace to that level. This level will form a temporary resistance level. Okay, so the price will retest this temporary resistance level. The price will hence fall, break this lower low, and fall further to form the second peak, which we will call a head. Okay, this first peak, we are calling it the first shoulder. Okay, the price fails to take more lower lows and lower highs, it starts to consolidate around here, then rises to our temporary resistance level. It is rejected and forms the second peak, which is the second shoulder. Okay, so this one forms the second shoulder. The reverse head and shoulder pattern is formed. It is forming like a W pattern. When this happens, we expect, if there is enough volume on the bullish momentum, to push this price up this temporary resistance level, have a pullback, and then trade on the counter trend. Remember, here we were saying that we were on a down trend. But when we come here, we have already changed the trend, and here we are in an up trend. Okay, so what we call this one was a breakout. This small price action is what we'll call a pullback. What happens here is a retest of this. Now it is a support area, but previously it was a resistance area. So this type of formation is called a reverse head and shoulder pattern, and happens when the trend is changing from the bearish trend to now a bullish trend. Okay, good. So if you look at this illustration, this first valley, the valley is formed, which is called the first shoulder, followed by even a lower valley, which is called a head, and then another valley, okay, which is now higher than this, called the second shoulder. Okay, this formation happens in a downtrend. So with this formation, we'll place a long entry along here. We'll place a long entry along there using a buy stop order. Using a buy stop order, so that when price comes and hit this order, it will trigger it. Make sure that we are in this trade. We retest this support now, and we enter into an up trend. Okay, so this line is called a neckline. On the break of this neckline, we are entering into long positions. All right, similar to the head and shoulder patterns, the reverse head and shoulder patterns, when we want to calculate now, remember we have entered our buys here. When we want to calculate our stop losses and our take profits, you'll come and calculate this distance. The distance between your neckline and your head. Let's say this distance is A. All right. So when you want to calculate your TP from your entry here, you will come and calculate your PIP difference between the neckline and the head, and that PIP difference will be the distance that the trade will likely travel to your TP, right? So let us say here we have our TP and this distance is B. So we are saying for you to know where you will exit this position is that the distance, the PIP difference in A should be equal to the PIP distance in B. That is in calculating our target. But what happens when we want to calculate our stop losses? To place your stop loss order, just place them above. You can either place them above here on the second shoulder, or you can place them just above this neckline, okay, according to your risk appetites. These stops will help you in case that this pattern will not work and the price may either reverse into your position. Okay, remember I said that this distance is approximately the distance that the price will travel after the break of this neckline. It will inform us on the placement of our take profits. Okay, it is very important to note that head and shoulder patterns, they happen in all time frames. Okay, and they can be visually seen in the daily time frame, in the 1 hour time frame, or in the 1 minute time frame. These patterns are continually happen where we expect some reversals from the downtrend to the uptrend or the uptrend to the downtrend. Okay, good. But I must caution you. You might sometimes feel frustrated using the head and shoulder patterns if you are not so much of a patient trader. Okay, so I encourage you that you must wait for this pattern to form, to complete, because the pattern may either not develop at all or it may partially develop. Okay, good. So a general rule of thumb on using the head and shoulder pattern is that the head must extend well above these two shoulders for you to confirm that you have a head and a shoulders pattern. Okay, most of the time I like to enter my trades after this pullback on the retest of the neckline, okay, so that I may have a good risk to reward ratio on most of my trades. All right, if you entered this trade here, okay, and you placed your stop losses just below this neckline, there is a higher chance that you will be stopped out before the trade moves into your desired direction. But if you wait for this pullback here, you place your stops either here or below this shoulder, there is a likelihood that you are getting a higher risk to reward ratio and your trades will be safe from stop hands and you will be quick to realize your take profits. All right, so that is basically all about head and shoulder patterns and the reverse of it. Any question up to there? Good. So this one takes us to the end of patterns. Remember we said that we do not use patterns in isolation. We use them with other forms of technical analysis like support and resistance, supply and demand, fair value gaps, and other imbalances in the markets to make us make informed decision on where the price is coming from, where it is going, and what it is doing. Remember, that is price action. Okay, so see you in the next class.